All right. So this is a special because you know that usually I don't go live on Saturdays, but why? What a week in the market. This was probably the most volatile and historic period in the markets ever. We had record breaking swings in stocks. We had spikes in the fear index that we haven't seen since the pandemic. And on Wednesday, we had a policy reversal by President Trump that drove markets, into chaos. No, they were in chaos before this. And this is what I want to explain to you. What happened here? Why did Trump suddenly blink and reverse his policy? Because, boy, there's a lot to unpack. So let's get started and let's take a look at this. So, first of all, this week, where do we stand? Holy cannoli. I mean, look at this. This is basically what the markets were doing ever since Trump announced the new tariffs. That was last Wednesday. And then the Dow moved lower, as you can see. Oh my gosh, we need a bigger pan for this. We do need a big green pan so that you see what's happening. There we go. Maybe that's a little bit too big, but you get the idea. So at first, moving down 1600. This was last Thursday. This was last Friday, Monday, Tuesday, and then look at this on Wednesday. On Wednesday, a massive reversal, but it didn't last long. This is what happened on Thursday, right here. And then on Friday, yesterday, the markets are up again. So let's unpack this. What happened? What was the chaos? And where do we go from here? Because I believe that this is super important. Okay. So first of all, let's move over to Monday and let's take a look at the charts and see where we were on Monday. And gosh, my God, it's really, we have to look here at a 5-minute chart. This is Friday, Thursday, Wednesday, and this is Monday. Look at Monday, a 5-minute chart of the S&P. At first, we opened the week lower. Then there were rumors that Trump might pause tariffs for 90 days, and suddenly markets rallied. The White House quickly said, nope, it's not going to happen, and market were back. Long story short, when we were down here, this is when the S&P moved into bear market territory. Yes, you heard this right. So let's take a look at this of what happened. How is the bear market territory defined? It's when we go from the highs that were recently made. As you can see, this was in February, to the lows of more than 20%. 20%. Exactly what happened. You see on Monday, the S&P was down 21% before this massive spike that we saw higher here. So this is what's happening. And then also the VIX, the fear index. Let's take a look at this. On Monday, look at this. The VIX spiked up to 60, a level of 60. This is the fear index. We got to zoom out on a weekly chart to see when was the last time that we spiked this high. And it was in July 2024 when we had the flash market crash. And before this, look at this. Before this, the only other time in the past, I don't know, 10 years or so was during the COVID pandemic. So what does it mean? It means that there's as much fear as during the pandemic in the markets. This is what happened. So we also saw on Monday, and this is important, that the yield started to spike. So this is where we need to look at the 10-year yield and why actually the yield started to drop, bonds started to spike. So why is the 10-year yield important? Because everything that runs on credit, like credit cards, mortgages, loans, I mean, all of this are on the 10-year yield. And you see, it has been spiking ever since Trump announced these tariffs. So this is where we see, okay, this was last week, then today is Friday, this year is Thursday, Wednesday, Tuesday, and Monday. You see this massive spike that we saw here on Monday. So we'll get back to this, to the spike here in just a moment. But let's unpack of what else happens, because on Tuesday, we have seen a super sharp reversal. So we're going back to the S&P 500. Again, tariffs are still in place. So here we see again a 5-minute chart. We're going back to Tuesday, and you see that on Tuesday, at first, we were rallying higher. There were some hopes that maybe there's talks that the tariffs will not go in effect, or that there is something happening, but nothing. And this is where we had another sell off. And this is where also, here's the kicker, that's where we need to take a look at the bond market, because as you know, over the past few weeks, President Trump says he doesn't care about the stock market. However, now we know that he does care about the bond market. Because again, if we are looking at what happened on Tuesday, so we got to zoom out here a little bit. So we have Friday, Thursday, Wednesday, and then Tuesday. You already see Tuesday, yields were spiking. That is scary. And here's why. So why were the 10-year yields spiking? First of all, when the yield is spiking, it means that the US 10, which is basically the 10-year bonds, are tanking. And this is what happened, right? I mean, investors were dumping bonds. And this doesn't make sense. Why would the stock market go down? The bond market is the safe haven. So usually what it means, the stock market goes down, the safe haven goes up. But no, we saw the stock market going down, the bond market going down, even gold. Gold was tanking. So what does it mean? You see, this is where in the beginning of the week, now gold is moving higher again, but in the beginning of the week, gold was tanking as well. So going back to the bond market, what does it mean? Number one, the big firms, they got margin calls. Yes, if this ever happened to you, that you got a margin call, you're not alone. I mean, there is the big firms like JP Morgan, Goldman Sachs, hedge funds, right? They got margin calls. How do they satisfy the margin call? Well, this is where they had to take out of the safe haven and had to dump and basically sell. This is what we saw here, right? I mean, actually go back to the 30-year. So this is where we see the 10-year actually. So the 10-year bonds, they sold the bonds, driving yields higher. Now, this is what also means, I mean, besides the margin calls, it also means if more investors are dumping US bonds, it means that there's no more trust in the US. Because this is when you see a sell-off in stocks, that investors don't believe in US companies again, and then also in bonds, that investors don't believe in the US as a country. That's when we start having trouble. And as you know, Japan and China are the largest bondholders. Yes, they own most of the US bonds. And there were fears that maybe China is retaliating by dumping bonds. So, why is this significant? Well, this is where Trump needed to make sure that this tariff war didn't turn into a financial crisis, because high yields are dangerous, right? I mean, it threatens borrowing costs across the economy and also for the federal budget. So, and this is where also economists start warning it. So, this is where basically Trump had no chance but to, do you want to say surrender or just blink? Because at this point, he imposed tariffs on pretty much every country in the world. I believe it was 185 countries. And the question was, who blinks first? Well, on Wednesday, Trump had to blink first. And this is where Trump announced that he will pause the tariffs on all countries except China for 90 days. And oh boy, look at this rally. This is where we have the announcement right here, and we see how the markets rallied. Now, let's take a look at the numbers here. The S&P, let's actually see. So let's go back here. The S&P surged 9%. 9%. That is the third largest single day percentage gain since World War II. So you might wonder, when were the other two? Well, they were in 2008, right after the financial crisis, when we saw a relief rally here. Now, also the Dow also moved sharply higher here. So here we see the Dow. The Dow rallied 2,600 points in a single day. That is plus 7%. Crazy. And the NASDAQ actually soared 10%, more than 10%. The trading volume reached 30 billion. 30 billion shares traded on that day, which is the highest in 20 or 30 years, something like this. So this is when we also saw that the bond market started stabilizing. But all of this didn't last long, because if we look what happened on the S&P on Thursday we were down again, and this is where we see here down again, the Dow more than 1,000 points. So because there's still uncertainty, there's still the question, what's happening next? And we'll talk about of how we approach this year in just a moment. So Thursday, everything down again, but then the VIX, look at the fear index, still at elevated levels that we haven't seen in a while. So think about it. When we had the flash crash right here, it was a one-day spike. We had a one-day spike in the VIX. After this, the VIX quickly started normalizing below 30. Right now, we are still at levels at around 40. So there's still a lot of uncertainty. Now, the good news is that on Friday, the markets rallied. So right now, traders and investors are going long into the weekend. What does it mean? It means Dow is up 1.5%, S&P is up 1.8%, NASDAQ is up 2%. So this means that traders and investors are hopeful that over the weekend there might be some news from China, because right now there's still 100% levy on Chinese goods. Now, think about it. I mean, if there's this enormous levy on Chinese goods, the tariffs, right? I mean, look around your room. I mean, if you look around your room, most of the stuff is made in China, right? Even if you think about your iPhone, Apple, 80% of their iPhones from China, straight from China. They're not doing anything in the US. So, I mean, an iPhone would probably cost like $3,000. And this is what we also saw this week. This week, briefly, Apple lost its crown of being the most valuable company in the world. Microsoft took over. However, today, with a little bit of a relief rally, we see that Apple bounced back up. Look at this, Apple with the overall market having a tremendous bounce here from the lows that Apple experienced on Tuesday to right now. Apple has an 18.5% move. So that's kind of crazy. Now, we have talked a lot about tariffs, and we have talked about what to expect. There's a few more things that happened this week that kind of flew under the radar. First of all, if we look at the calendar and we look at the economic calendar, this week we had some great news, fantastic news from the inflation front. Look at this. The CPI, the Consumer Price Index, fell for the first time in a long time. It was expected to go up 0.1%, but it fell. Last month, the CPI year over year came in at 2.8%. It was expected that it moves down to 2.5%, but shocker, it moved down to 2.4%. That is great news from the inflation front. Now, on Friday, yesterday, the PPI, the Producer Price Index, was revealed. And look at this, also a shocker. Great news all over. The Producer Price Index fell by 0.4%. It was expected to increase by 0.2%. So, great news from the economic front. What else has been going on this week that nobody really noticed because we were all so focused on tariffs here? Well, let's take a look at the earnings calendar. And yes, earnings season is kicking off. Did you know this? Yes, today, not yesterday. Yesterday, the banks reported earnings, and it's always kicking off by JP Morgan, Wells Fargo, Morgan Stanley, BlackRock. And you know what? All of these guys reported blockbuster earnings. Let's take a look, first of all, at JP Morgan. Look at this. JP Morgan up on Friday, 4%, because they blew it out of the water. The profits rose by 10%. Kind of crazy. Morgan Stanley, let's take a look at these guys, up 1.4%, and their profits actually soared by 17%. We also had BlackRock, BLK, the symbol here, and we see that BlackRock, their profits soared 12%. So yes, the big banks are making money. And you might have seen that Trump tweeted on Wednesday morning, "Buy, baby, buy," something like this. I mean, I'm paraphrasing it. And a few hours later, he announced that the tariffs would be paused for 90 days. The markets rallied 9%. So This is what I call the great transfer of wealth. And I decided to do a webinar this week around this. I'll probably put a link in the description here. So if you want, you can sign up. Let me see if I can do this. Anyhow, so what to expect next week? Well, first of all, the focus is still on the tariff war between the US and China, because as you know, the US and China went tit for tat. I mean, raising tariffs to a point where right now, I believe we had 145% tariffs, which is kind of on both sides. Maybe it's a little bit lower. Let's see. I think I recently saw a summary where we stand with all of the tariffs. Let me just quickly see if I can find it here. If not, it is crazy at what these two are doing. Anyhow, so at some point, again, somebody needs to blink, and this is what investors are hoping for. But then also on the economic front, not a whole lot going on next week. So if you go into next week, we see there's nothing going on in terms of economic news, but we do have the earnings calendar. Yes, right now there will be the focus on earnings. And of course, first of all, we are looking back on Q1, but then also everybody wants to hear how this uncertainty is affecting companies like Goldman Sachs on Monday. We have Johnson & Johnson, Bank of America, Citigroup, PNC Financial on Tuesday. United Airlines also on Tuesday after the bell. And we already heard this week from Delta Airlines that they say, well, we are basically not giving you any market outlook. And this is what I expect from companies going into earnings this week, that they might say, you know what, everything that you wanted us to give you for the 2025 outlook, forget about this, because at this point, we don't know what's happening with tariffs and how this is affecting us. We have Abbott Laboratories, we have Progressive Insurance, then we have a few more financials. We have American Express, Blackstone, Charles Schwab, and the first tech company are reporting earnings on Thursday afternoon, April 17th. It will be Netflix. So what to expect? Hold on to your heads. I mean, this volatility is not going away. As you can see, if you go back to the S&P 500, what are the possible levels? First of all, let's see. We are looking at the 200-day moving average, and we are far away from the 200-day moving average. But there's only two possibilities where we can go from here. So either we are staying in this range between 5,000 and 5,400. And if we stay in this range, I wouldn't be too surprised if we even test the low at 4,800. Or this is what I believe is the more likely scenario, that we are going back into this range that we saw earlier between 5,500. So this is 5,500 to 5,800, and that we diddle along a little bit there until we know more. But there's right now no new highs in sight. However, I believe that this is a great opportunity. And yes, of course, we're still following the wheel strategy, because if you think about it, right? So if you're just doing a very super basic approach, forget about trading options, forget about the wheel strategy, forget about any strategy. Let's just say you're looking at the S&P and you're doing the following. Let's just say that you are maybe dividing your capital into 25% chunks. So you have 4 chunks, right? So something super simple. What could you do? As soon as you see the S&P moving down by 10%, you deploy the first quarter of your capital in the market, because often the S&P only retraces 10%, which is the so-called correction, and then moves right back. However, if it moves down 20%, here's what you could do. This is when you deploy the next quarter of your capital, if you want to do so. And then you could see what happens. You could actually wait until maybe the S&P is down 30% and deploy another quarter of your capital. Now, why would you do this? Again, this is the simplest way, because eventually we will see new all-time highs. Keep in mind, what we are seeing here is an event. This is not comparable to the dot-com crisis. This is not comparable to the 2008 crisis. What we are seeing right now is comparable to another event that we had just a few years ago, exactly 5 years ago. And this is the COVID event. And you see that we first dropped quickly and then we bounced back. And this is what I'm expecting this time, because Trump and his advisors kept an eye on the bond market and averted a financial crisis. And we could have had We could have slipped into a financial crisis here if big banks and hedge funds would have been forced to liquidate or pull their money out of the bond market and the gold market. But so far, the crisis has been averted. It seems that Trump is keeping an eye on the bond market. Therefore, this, I believe, will be a very similar event, and we will go back to new all-time highs. Now, how quickly? Not anytime soon, but I do believe there's a possibility that by the end of the year or within a year, we could be there. So ask yourself, what is the quickest way to make 20% in the markets? Well, you buy when the markets are down 20% because you know that in the long run, they will go back. Now, again, this is not financial advice at all. I'm not a financial license advisor or anything like this. This is my opinion to you in the same way as I would tell it to a friend and saying, listen, I believe it is a great time to buy. And if you look around, I'm not the only one who is saying this. Anyhow, exciting times ahead. Here is one thing that you should avoid: buying at highs. When there's fear in the market, and I think Warren Buffett said it best, right? Warren Buffett always said, okay, be fearful when others are greedy and be greedy when others are fearful. Right now, with the VIX trading at these levels, others are fearful. This, for me, is a time to be greedy. I will keep trading. I'm enjoying this. And I know it's stressful times. Hang in there. I think in the long run, we'll be just fine. If you do have any questions, post them below in the comments. I'll be happy to answer them. And until then, have a great rest of your weekend. Enjoy this week, and I'll see you very soon.